Hello everyone, this is Sebastian McMahon from IA Financial Group, and I'm back with the weekly economic review for the week ending May 22nd, 2026. Before I get into the content here, just wanted to announce that we have a brand new web page called the Macro Playlist. So you have it on the screen here. You can log in by using the URL that is here, mcmahon.ia.ca/en, to land on the English page. You can also follow us, of course, on social media, X and LinkedIn. But now we have a hub where you can find everything. You don't have to listen to this video on YouTube and then go to another web page for the monthly. Now everything is streamlined here, and we also added a new feature that we started last week, the chart of the week. You can find it on LinkedIn and on X on Wednesdays, but you will also find it here on this web page. So one post a week, it's a blog. You can find everything there. And of course, we are big music fans. Macro playlist, we thought there was a nice catch to it, but there is an actual playlist that you can listen to while you're on the page. It's on Spotify. You can also subscribe to it, and every time we write a new piece and we use a new song title as a title for the piece, we'll be adding it to the playlist, so you can follow us along on this musical journey of us as well. So Macro Playlist, you have everything here. Enjoy. If you have feedback, please send it our way, always takers. If you're already subscribed to the newsletter, you will get the link to that, and you can subscribe to the newsletter on the web page, so you won't miss a thing here. So Macro Playlist, brand new platform here for everyone out there. Now, looking at this week's markets at the close on Thursday, so very positive week again. That's the longest stretch of weekly gains for the S&P 500 since 2023. So we've seen a lot of good things here. I mean, you have the picture right here. We are hearing good things again about a possible end to the Iran-US situation this morning. We are hearing that they would be close to a deal to just stop the hostilities and reopen the strait and maybe kick the can a little bit further down on negotiating the major aspects like the enrichment of uranium and all of that. We've heard that before, but this morning it sounds a little bit more legit, I would say. Pakistan is involved, and Pakistan representatives are set to visit Iran later today, so it smells good, but we'll see what we get. Of course, this has carried the markets higher. If we do get a deal, can the markets continue to rise on that news? Maybe it's already priced in, only time will tell. But, year to date, it's hard to beat 20% on emerging markets after less than 5 months and 13% on NASDAQ. But, we're seeing some good things here. Price of oil also sharply lower this week. So let's see what kind of new equilibrium level we can reach. We'll see when we do, or if we do get a deal. Now, the title of the piece was Canadian Pessimism. So the Canadian economy is in the transition period. It's weak right now. We've lost 120,000 jobs in the first 4 months of the year. And last week, I was telling you about the U.S. inflationary picture, which is getting dire. This summer, it's written in the sky. It's purely mathematics that we will see 4% plus inflation just when Kevin Warsh, a new Fed president, comes in. And of course, he will be looking to cut rates, but he won't be able to because inflation will be too hot. That's the US situation. In Canada, it's a bit different. So this week we got the CPI on the left. Here you have a total and core CPI. So total CPI is higher because of the price of gasoline. You cannot escape that. But core CPI is weaker, and it's now at 1.5%. That's the weakest since 2021. And for the Bank of Canada, you look at core inflation because you want to see if you're starting to have an inflation problem by seeing if it spreads through the economy. And core inflation tells you just that, and it's telling you that no, inflation is not spreading. And mostly right now, it's the weakness of the Canadian economy that is dominating the picture here. So the backdrop in Canada is disinflationary. So that's for the wrong reasons. there's reasons to rejoice here, because that means that the Bank of Canada is likely not about to hike rates as markets are pricing, and especially not twice by the end of the year if the situation stays the same here. On the right, which was our chart of the week, this week, the breadth of CPI inflation. So if you focus on the red line, the share of components that are seeing inflation above 5%, it was a little bit hotter recently, but now it's coming back down. So we're seeing less and less inflationary pockets in the Canadian economy here. So there's good news as well. So here it tells a positive story that you can discount the fact that what markets are thinking about the bank, but also for the wrong reasons, because the Canadian economy is rather weak right now. So that's the first picture. Second one, 3 charts here, 3 pages. Small Canadian businesses are quite pessimistic, and we've mentioned that quite often over the last year, that for Canada's model to evolve, we need to have confident businesses. Businesses are those who invest, they are those who hire people. And here what we see from the latest CFIB Business Barometer Index, that suddenly it's back to pessimism. So we did have a bout of optimism somewhere around the turn of the year, but now it's back to pessimism. And on the right, intentions to increase staffing. They were a bit hotter for a while, but now it's back to lower levels. So it's not a pretty picture that we're seeing here. It's not conductive to good things just about to happen in Canada. So we have to keep a keen eye on that. And if we dig into the provinces, the next slide here, you see that you have two indices, the confidence over the next 12 months and the confidence over the next 3 months. So long-term view, short-term view. And as you can see, percentage variation month over month, it's negative across the board. So in every province, you're seeing more pessimism, short-term, long-term. Quebec and Ontario, of course, the largest provinces, are seeing their confidence being hurt. They're more impacted also by tariffs, but also Alberta. Mighty Alberta here also is getting a bit weaker as well in terms of business confidence. So it's a worrying picture here. So we're still making new lows on confidence. If we look at sectors now, broadly negative for the 12-month index on the left, 3-month broadly negative, but 2 pockets of strength, manufacturing and transportation and warehousing. So of course it goes hand in hand with manufacturing. There might be some reasons to rejoice here, because positive is a positive, so we'll take it. But also remember, as we've mentioned a few times, that we are seeing an uptick in the inventory cycle in North America, mostly in the US, because US businesses, they accumulated inventories in late 2024. They were expecting some fireworks from Trump on the tariff side. So then after that, stopped the accumulation of inventories, left the storm pass, and now they are forced to just rebuild their inventories and pay the tariff. So we are having this inventory cycle here, which is good for Canadian manufacturing, transportation, and warehousing, but there's an expiration date on that, and at some point that could turn again to being a negative. So we're not out of the woods. There's reasons to be confident about the future of Canada with everything that's going on with the large projects and all of those, this willingness to become an energy superpower. So and the spending in defense and infrastructure. But you have to look at the actual data as well, and the actual data is telling you that we're in a pocket of weakness here, and there's nothing here to point to an imminent change, sadly. So that's the picture for Canada. Now, what we'll be watching next week, current account balance. If we export more, we import less. It will show in this index here. We have seen some progress recently, but it's going to be an interesting one to follow over the next few years to see how this transition of our business model is evolving. So we'll see. March GDP as well will be out. In the U.S. Conference Board, Consumer Confidence Index, always very useful, and core PC inflation, the measure that the Fed uses to make his decisions. So let's see if this one also is is sending a very inflationary message next week. So wraps it up for the week. Again, macro playlist is the new destination to follow us. mcmahon.ia.ca/en. Of course, you can follow us on social media. So visit the page, bookmark it, subscribe to the newsletter. This is your new hub for macro and market information, and also where you can listen to pretty good music while reading what we have to say. So always a pleasure to serve you. If you appreciate the content, please share, but of course, come back next week.